So I have lost money on this stock. My stop loss is triggered just to show you how does it look like when your stop loss gets triggered. I'm making this video as the market is live right now. Okay, it's 2:27 in the afternoon. So the market will close in about 45 minutes. But you see this red bar, the market is live right now. And you see this red line, that's my stop loss. And it just got triggered. Okay, so I bought here on this day and I kept an 8% stop loss, half position size, and see my stop loss has got triggered. Okay, so I have made a video on why I bought this stock on this day. You can go back to last week's video to check why did I buy the stock on that particular day. I have discussed all of these parameters that I looked at before buying the stock. Okay, so please watch that video and then come back to this video. It is very important because every trade, as I said earlier, is a story and I like to narrate the story. So this is a follow-up video on that particular video. So first you have to understand why I bought the stock. Okay, why I took half position size, why did I keep a stop loss where I kept it, and why I'm coming out of the trade now automatically. It's automatically kicked me out of the trade. Okay, so that story I want to narrate now. I want to complete this story now. Okay, so as we saw at the time that I bought this stock, comparatively it was very strong. Price strength 82, buyer rating B, industry rank 10, industry strength was improving. So I'm talking about these numbers as I saw them on this day. Okay. The problem with this stock was technically, if you see, there is a blue dot, which means 52-week high of the relative strength line. Okay, so the stock is very strong compared to the Nifty. Then blue, green, red means the price is above all the moving averages. All the moving averages are sloping up. There are more than 10 candles in the base. There are around 6 points in the base. The buy point is in the blue zone, correct? So technically it was good. There was only one weakness, which is stage 5. So it is late stage. I am buying the stock late. The stock has already had a big run up before it has reached this price. So that was the primary reason which I have discussed in the previous video. That was a primary reason that I took half of my normal position. And we will come to position size calculation because this week, I think last week I have made some videos about position size, position risk, portfolio risk. So we will complete that discussion also with this particular stock. Okay, we will calculate how much money was lost in percentage terms compared to the portfolio. Okay, EPS was showing good acceleration, sales decent numbers, ROE very good, more than 17%, margin improving. It was an industry leader, market condition, rally attempt, annual EPS was growing. So I looked at all these factors. I said the stock looks comparatively strong, technically strong, fundamentally strong. It is a leader in the market. It's a leader in its own industry group, market capitalization wise, and the annual EPS is showing some positive growth in the past 3 years. There is only one weakness, which is the I'm buying the stock late. It is a late stage base within the stage 2 uptrend. That was one weakness. Second weakness was, see, before this day the price seemed to be drifting down. So if I hide this, see, before this day I bought it here somewhere. So the price seemed to be drifting down. If you join these 2 points, 1, 2, 3, it's drifting down. It's not going sideways by going up and then going sideways. I have drawn that sideways base in the previous video. So that is why I say, please check that previous video. The title of the video is Why Did I Buy Polymedicure Stock? Okay. Please check that video. Try to first understand why I bought the stock and then come to this video to complete the entire story. That will give you a full 360-degree learning. See, if you lose money on a stock, that is the best stock that you can learn from. If you are making money from a stock, you don't learn anything. You learn only when you lose money. Okay. So coming back to, yes. So that is why One weakness was I was buying it late. Within the stage 2 uptrend, there is base 1, base 2, which is early stage. There is base 3, which is middle stage. And there is base 4, base 5, which is late stage. By the time the stock goes from base 1 to base 5, it's probably given 500% return. You can check charts of previous other stocks which have created that many number of bases. Okay, there is a company called HBL Power Systems. I remember the stock created 9 bases. Okay, and it went up like 8 to 10 times in about 2 to 3 years. That's a fantastic run. Okay, so I am buying this stock late, number one. Number two, while trade execution, I made a mistake. Sorry, not on this stock. The mistake was done on some other stock. While trade execution, I did not make any mistake because my average execution price is within the two yellow lines. Okay, so trade execution is not a problem. The only issue was the base stage. I was buying it late, so that is why I decided that I will go in with a half position size. So my normal position size is 6.25% of my portfolio. I hope you now understand what is position size, assuming that you have watched the previous 2 3 videos that I have made, where I have discussed 5 terms which I have added to your trading vocabulary: position size, position risk, portfolio exposure, cash position. These are the 5 important terms which I have added to your vocabulary, trading vocabulary, and I hope you understand them very clearly. Okay. So position size was half of normal. Normal position size in this market for me is 6.25%. And this is, I took this reference from Mark Minervini's book, Think and Trade Like a Champion. He talks about 6.25% position size on one base, then topping up that position with another 6.25% position size on another base where you are buying the stock at a subsequent level. Okay. So that's why I took half of 6.25%. That was my position size. After I get the green line, I put my stop loss at the red line, which is 8%, exactly 8% below the green line. Okay. And today that stop loss got hit. So what is my actual loss? Is it 8%? No, it is 4% because on a normal position size, if my stop loss is 8% and if I have taken half the position size, my loss is not 8%. My loss is 4%. So this is a way to control or manage your risk. Okay. So let's go to position size calculation. So my position size in this stock is 6.25% divided by, 6.25% multiplied by 50%. Half of 6.25%, correct? My position risk in this stock is equal to 8%, correct? So what is my portfolio risk? My portfolio risk is equal to position size multiplied by position risk, which is equal to 6.25% times 50% means half position size multiplied by 8%. Okay. So we know that 6.25% times 8%, that is 0.5%. Okay. That is, I am risking half a percentage of my overall portfolio on that single stock with a normal position size, normal stop loss. But in this case, I am risking half position size, multiply that with 50%, right? That is equal to 0.25%. So that is my loss. This is my actual loss. This is what I want you to understand. See, even though I have lost money on the stock, my loss is 0.25% of my overall portfolio. So it is 1/4 of 1% of my overall portfolio. So it's a very, very tiny loss. Okay. So this is the way to manage your position size. This is the way to manage your risk. This is the way to keep your stop loss. This is the way you can control your losses. Okay. As long as your losses are small, you will be doing well. And intuitively, when I spoke in the last video, when I bought the stock, intuitively, I know that I am getting into a risky situation because number one, The buy point was never in the green zone. Okay, after point two, the price never reached the green zone, and even before the buy point. Okay, see, most of the candles after creating point number 5, all the three candles are in the red zone. They did not even come to the blue zone. So I knew this. I was watching this on the chart. But since there were other factors which were showing very strong, I mean, you don't get to see such kind of numbers normally in a stock. It was doing perfect in all departments, comparative, technical, fundamental. So that is why intuitively I knew that I was getting into a risky situation. If the buy point was in the green zone, I would have been more comfortable. Okay. But here the buy point was in the blue zone. After point 0.5, all the three candles were in the red zone. The price seemed to be drifting down. It is a late stage base, which means volatility is expected. Given all these factors, my mind told me, Rohit, don't take full position, take half position. Okay. And that decision was correct. Okay. See, the stop loss got hit. So, the market will not spare you. In spite of all these great numbers. Okay. Technically, unless the stock shows a good setup, you are not likely to make money in the long run. Okay. So, the fundamental strength, comparative strength has to be confirmed by technical setup, technical chart setup. Okay. If the chart setup is not ideal, I mean, we would prefer to buy very close to point number one, especially in the green zone. Okay. So that there is no overhead supply. Oh, I hope you understand what is overhead supply. I will not get into the details, but the lower we buy compared to point number one, the more is the overhead supply that we have to deal with. Now, next point. Has the base failed? Answer is no. Because point number one, point number two is still intact. Okay. Has the base failed? Answer is no. Has the trend failed? Has the stock become a stage 3 or stage 4 stock? No. It is still in stage 2. Is the price still below all the moving averages? Yes. Are the moving averages sloping up? Yes. So the base has not failed. The trend has not failed. Only the pivot point or the buy point has failed. Now, next question. Can the buy point reset? Of course, it can reset. Can it go up, start going up from here, create another buy point here? Of course, it can. Can the price continue to remain above the 50-day simple moving average? Of course, it can. Can you make a purchase again? Of course, you can. The question is position size. If the stock goes into the green zone, creates a buy point, given that the market is still trying to rally, the market is still not showing a confirmed uptrend, what would you do? Would you buy the stock again? Okay. See, there is no yes or no answer. There is no right or wrong in trading. We will see at that point in time what is the situation, because by the time the stock reaches here, these numbers would have changed. Okay. Not that they change overnight, but we have to reassess the situation. Okay. And then at that time, we will take a decision as to what we have to do. Even if we buy the stock, probably we will not go in with a 8% stop loss. We will go in with a half position size, half stop loss. So your risk is reduced even further. Okay. 2 times almost of normal risk. Sorry, 4 times of normal risk, because you are not only reducing position size, you are also reducing your stop loss. Okay. So that would be the approach. So that's the story. The story is, why did I buy the stock? Why did I take half position? Where did I keep my stop loss? How much money did I lose as a percentage of my overall portfolio? How did I control my risk? What was my trade execution? So I judge myself based on 3 factors: stock selection, trade execution, trade management. In this case, was my stock selection good? Yes, my stock selection was good because it was showing strength in almost all departments. Number two, was my trade execution okay? Yes, my trade execution was okay because I bought it within that yellow band. Okay. Number three, was my trade management okay? Yes, of course, my trade management was okay because I managed the position. I did not allow the loss to expand. Okay. So I did everything right on this trade and I still lost money, but I learned important lesson. Now, what is the key learning from this story? Okay. Every story has a moral. What's the moral of this story? The moral of the story is, Be careful when you are buying stocks which are in a late stage. Even Zomato currently is in a late stage base. Okay. And I had to come out of the stock, but there I booked a profit. Okay. So that profit partially compensates for the loss that I have made here. So those two positions are squaring off each other. Okay. Not completely, but at least partially. So lesson number one, be careful with a stock when you are buying it late in its stage two uptrend. Lesson number two, when the market is in a rally attempt, okay, control your position size. If you are buying such stocks, if the market is in a rally attempt, try to buy stocks inside the green zone because they are showing extraordinary strength when the market is still weak. Okay, two important learnings. Check the market condition, check the stage in which you are buying the stock. You cannot buy a stock late and expect no volatility. No, that will not happen. If you buy late, you will expect volatility. Thank you so much for your time.